So, I found well, it's a really good blog. The guy that wrote this he's a tax expert, put it this way. And the website is called taxresearch.co.uk. He basically spends most of his time writing about tax, implications of the tax. Basically, if you can think of something about tax, he's probably written about it. But I'll leave a link to the blog below as well. But he has come across something I have seen in action multiple times on this channel in the comment section, and I sympathise with him. So, the blog is called "Brexit Will Deliver a Liquidity Crisis That Will Make 2008 Look Like a Half-Hearted Warm-Up Act." Now, I keep on telling people this, that if you live in a city, the 2008 crash was effectively over a couple of years ago. If you do not live in a city, you are still suffering the effects of the 2008 crash. Something that happened, over 10 years ago now. So, anyway, it gets into it. So, I promise I tried. I went for a drink with a long-time friend who is dedicated to Brexit yesterday. He had read my blog on what I think to be the gargantuan risks arising from Brexit, and I think it's fair to say he believes I have massively overstated my case. To cut to the chase, we tried to find common ground and failed. He thinks I'm blinded by expertise. So, we've seen this hundreds of times before. We've had experts coming out saying this, and you've had other people who just goes, "Oh no, that expert's completely wrong." But here you have someone who is a friend to an expert who basically says, "Oh no, you're blinded by your expertise." That is a special kind of denialism I think we are experiencing in Brexit, which I'm dubbing Brexit blinkers. So he claims that it's like this, which he does not trust because he thinks it destroys the entrepreneurial spirit that he believes underpins Brexit. So that's his reason why he doesn't trust his own friend who is an expert and other people who are experts probably. So, plus a devotion to the EU, which he cannot understand since he believes anyone left of centre must mistrust it. And in a sense, he is right, of course. I have massive reservations about the EU, which needs reform, but just not in the way he proposes, which is through a shock delivered by hard Brexit. In turn, I think, like many Brexiteers, he is blinded. In his case, a belief in three things. The first is that the economically largely functions apart from politics and regulations, and that the changes arising from Brexit will have little real impact on day-to-day life or well-being. I completely agree on that one. Secondly, he believes that markets will clear any disruption arising from Brexit almost instantly. Many people believe that. I agree with that is what many people believe, but that's not what's going to happen. So, for example, he is quite sure that the supposed labour shortages in the East Anglia agriculture, where hundreds of thousands of East Europeans work at present, will be solved overnight by an increase in wages that will send replacement local employees into the fields in their droves. Which wages will, however, have little impact on inflation whilst reflecting on long-suffering rural communities. Again, can't disagree with him. That's exactly what you see as well. Again, posted many times in the comments. And third, he thinks even if it does not happen, there is no risk because a flood of new Russian, Chinese and other capital will pour into the UK after Brexit to replace lost capital. We played out these scenarios looking at the agricultural sector that dominates my home region. I suggested that many local businesses are intensely fragile and operate largely like many great households on the basis of tiny capital bases, which means that even if a few weeks of disruption created by labour shortages and so a lack of goods to pick, ship and process will be enough to tip many of those local entrepreneurs into failure. I cannot see how this disruption will not happen if a rapid ban on migration or a reduced market reliance on the part of EU citizens to travel to here as a consequence of a hard Brexit results in labour shortages. He did not dispute the fragility of these enterprises, where a lack of cash flow will be crippling. But he simply believes that markets will adapt. He says that labour rates are already rising. I point that out. This is because of a change in the minimum wage. He says new labour is being attracted in. I point to new data showing that at present inward EU migration is growing. And as a result, I argued that the market is not then adapting as he suggests. It is its current behaviour is instead being reinforced. And in that case, I cannot simply see how the hard Brexit he openly desires, without any transition of any sort, cannot be disastrous. To offer an analogy, I think such a Brexit will be like the banking crisis of October 2008, just as there was then. Hard Brexit will deliver the most massive liquidity crisis in the UK. Goods will not move, crops will not be picked, planes may not genuinely fly, a scenario dismissed by him as impossible by my good friend, yet wholly acceptable. Regulatory agencies may collapse under the weight of incremental work growth on a staggering scale, and as a result, cash flows will fall for businesses and so too for households. I stress that in saying this, I am not saying that it is impossible to leave the EU. I doubt its wisdom, but I do not doubt the possibility. But as I explicitly explained over a beer, the crisis we will face in the rate of change Brexit will create in mathematical terms. My friend has a maths degree. The first differential here is leaving the EU. The second is at the rate we do so. So long as the rate of change is manageable, we can leave. If it is too fast, too soon, the results will be cataclysmic. Our problem is that a great many people in the UK think we can leave the EU without consequence. They share my friend's desire for a hard Brexit now. They cannot see the problem. They think, as did the market fundamentalists prior to October 2008, that if there is an issue to solve, markets will resolve it. The markets will resolve it itself. Or to put it in a local context, there will be a suitably supply of British labour waiting to work in East Anglia farms on the day the Bulgarians leave at pay rates that can be set instantly and appropriately, which can then be fully recovered from supermarkets, who will instantly pass consequential price rises on without concern or delay to customers, whose demand will not alter as a result, and everything will continue to function without delay or cost, or as a result of the change that a hard Brexit and the expulsion of a pile of people from the UK, which is what is expected and demand, creates. This, in my opinion, naive belief will not deliver in financial markets, and I am certain it will not do so in a post-Brexit markets either. The reality is that people aren't lined up to work. Pay rates for post-Brexit labour are not agreed. Supermarkets will resist all price increases at the time of uncertainty, and in the middle, farmers and all the related activities that feed the agricultural economy with work will be squeezed of their working capital and many will go bust. In my opinion, Brexit could induce the biggest liquidity crisis in this country's history, and not just in agriculture. The delays in the flow of goods in other sectors will have the same impact. Working capital will disappear overnight in long supply chains. And of course, this will have knock-on effects. Until we get to a banking crisis, it could not take long. And that's because, as we know, once liquidity begins to evaporate, it disappears remarkably quickly. My friend thought my analysis was wrong, but in case it was not, and he conceded the possibility, he was sanguine. And he had noted that my saying in this blog, there is a mountain of money in the world at present looking for a home, and accepting naive interest rates while seeking to find one, he thought that the moment after Brexit and the first hint of economic collapse, Chinese and most especially Russian money would pour into the UK to buy up distressed assets, bolster the pound and revive the economy. The problem is then you now have hundreds of thousands of Russian and Chinese interests now in charge of this country. And if you think that these people aren't going to want to exert their interests, such as lowering our standards, bear in mind we have, because we are in the EU, we have the highest standards of any country. And bear in mind, high standards are not a bad thing to have. They are very good. But, you know. So I expressed my distaste at the idea of a Putin-controlled Britain. I was firmly put in my place about all the merits Putin has and his enormous achievements in Russia. Our evening did not last as long as I expected. My friend doubted we would be seeing each other again socially. He would be sticking to his many other friends who share his views, that they were right and they were clearly going to win. I was saddened. My friend seems to think that his friends must share all his views, and none must be Remainers. But I was also troubled. My ex-friend and I met half a mile from Oliver Cromwell's house last night. This was an Ely resident from another era where people of differing opinions could not meet socially. I felt disturbingly close. Yeah, this is typical. This is not something new, to be honest. This has been happening really since the whole Brexit thing. I mean, you have a prime example. The last video I posted, one that, if you want to look for a perfect example, go look on the Brexit, Britain, the EU, and the sovereignty myth. Go look under there, and you will see a conversation taking place between two Europeans and two guys from Britain. Now, these two British guys are spouting every single Brexit propaganda piece you can think of, and the Europeans are going, no, that's not true at all, because there's this, and they're basically pointing to examples, and then these guys are turning around and just going, oh, I didn't know that. And I'm just like, this is the main one of these big causes, is that a lot of people just do not know or understand fundamentally the EU, not even on a basic level, which is something, you know, I like to think I have on a very basic level, and even understanding that on a very basic level, I can see we are going to have huge economic problems, not just short term or medium term. I am talking long term, and I'm talking these problems are going to linger with us probably until we join the EU. And then there's even problems after that, where you have a lot of these EU institutions and not only companies moving to back, you know, into the EU. Even if we rejoin, these companies and these institutions are not suddenly just going to come back just because we've gone back into the EU. So you have huge economic complications and just general complications for this country. And this one about, you know, having a serious liquidity crisis. And bear in mind, this guy is, you know, he's a tax expert. You know, I agree on those 3 points he said about, you know, why he thinks, you know, why this guy said, you know, he thinks, you know, Brexit is going to succeed. It's based on an absolute fantasy. And this idea that, you know, China and Russia are just going to come and buy everything up, that will have consequences as well. You know, maybe not the intended consequences you think to be, you know, as good. You know, I know a lot of these Brexiteers do complain about the fact that all these, you know, British companies aren't British owned anymore. Well, they're going to be owned by Russian and Chinese companies now. And here's the thing, if their markets start to contract, they'll pull out of the UK. You know, there's knock-on effects constantly of these things. And, you know, we had the video we did yesterday about Japan. 40% of all the investment that Japan sends to the EU goes to Britain. That's gone, effectively. You know, the Japanese ambassador to the UK put it very bluntly. He said, look, the reason why we invest so much money, as do other countries, is because you are a good gateway to the EU. Now we are not in the EU, that investment goes. And you know, that will go somewhere else to the EU. It could go to Ireland. It could go to the Netherlands. You know, it could go to France. You already have banking companies as well looking at the possibility of moving to Frankfurt or Amsterdam or Paris. You know, these are actual real world possibilities that will have huge knock-on effects. And, you know, we were told, oh, Brexit will be fine, Brexit will be fine. It's not going to be fine. And I think there will have to come a time where these Brexiteers will have to answer very hard questions. You know, with Liam Fox has already been taken to task that he called, oh, getting these trade deals will be easy. Da, 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 da. No, it won't be easy. It'll be incredibly hard. And the UK, when we leave, will be in an incredibly weak position. We have little to no manufacturing base to speak of. We are predominantly a service you know, industry that mainly supports our economy. And bear in mind, the only trade deal to sort services is actually the one we have at the moment with being in the EU, which is a massive boon for us because, as I've said, we are very much a service economy. Once we leave, we lose those treaties, we lose that framework to have access into the EU. And do you think that you know, the US is going to let us have access to their financial services? No, of course not. This is going to be absolutely daft. Completely. So this is very much a term of, you know, a lure of greatness. In fact, there's a very good book. Hang on, it is. Where is it? Yeah. So Anthony Barnett wrote a book that came out last year called The Lure of Greatness. And it's basically based on the notion that Britain still has the ability to shape the world, and it really doesn't. Britain no longer has that ability. We saw this through all the Commonwealth stuff that happened a couple of weeks ago now. All these Commonwealth countries are not interested. I'm sorry. India put it bluntly. He said the Commonwealth will not become an imperial bazaar. And all the other Commonwealth countries echoed that sentiment. And as I have to keep on reminding people, the Commonwealth is not an economic bloc. It is barely anything. So, yeah, we continue on this absolute farce that is Brexit still. Will the economic realities become crushing home? Absolutely. And as I keep on saying to these people, enjoy the last sort of, couple of years. You've probably got this year and probably next year where the economy of Britain will probably be stable. After that, Brexit will kick in. And it is not going to be a gentle kick. It will be a massive kick to it'll be literally a boot to the head. And it will be incredibly painful. And Brexiteers will have to answer for that.